NIO stock finished the week at $6.38 per share, down about 2% on Friday, though it clawed back a couple of cents in the aftermarket. On the surface, this might look like a quiet close. But when we zoom out, something more important is happening. NIO has now closed above $6 for more than a week straight. That's the first time it has managed to defend this level in more than half a year. It's easy to get lost in the day-to-day moves, the pullbacks, the rebounds, the chatter about whether 650 or 7 will be tested next. But this weekend is a good chance to step back and think bigger. If $6 is the new floor, what's the next chapter? Can NIO translate this quiet resilience into something bigger, something global? That's the question I want to explore today. NIO spent much of the past year stuck under $5. Every rally attempt fizzled. But in the past 2 weeks, fueled by optimism around product launches, analyst chatter, and a supportive macro backdrop, the stock surged nearly 40%. Since then, it has consolidated in a higher range. This isn't just a technical milestone, it's a psychological one. Investors who are used to seeing NIO as a struggling name under 5 are now watching it defend 6. That matters, because the longer a stock holds above a new support, the more confidence it builds. And confidence is the currency that drives momentum in growth names. So while Friday's 2% dip might look disappointing, the bigger picture is that the stock ended the week still above 630. The resilience tells us the breakout wasn't a fluke. It's being tested, and it's holding. One of the key drivers of optimism right now is NIO's product pipeline. The redesigned ES8 SUV is a premium 3-row EV positioned directly against Tesla's Model Y in China. Under NIO's battery-as-a-service program, it comes in at around $43,000, making it competitive on both price and performance. It keeps NIO in the conversation in the premium segment and signals that the company hasn't abandoned its roots as a luxury brand. Even more important is the Onvo L90, the first model under NIO's new mass-market brand. Analysts project it could reach up to 10,000 sales per month by the fourth quarter. Considering NIO currently delivers 20 to 30,000 vehicles per month across all models, that would represent a game-changing boost to volumes. If the L90 lives up to its potential, it won't just increase sales, it will redefine NIO's identity. No longer just a niche premium EV maker, NIO could become a scale player in the mass market. That's the kind of transformation that can attract new investors, new customers, and new partnerships. Looking a little further ahead, the company is preparing to launch the Firefly brand, a smaller electric hatchback targeting Europe, Asia, and Latin America by 2025. This signals something important. NIO is no longer thinking only about China. It's planting seeds for global growth. The EV market is crowded, and expanding internationally is risky. Tesla dominates in many regions, BYD is rapidly scaling globally, and new entrants like Xiaomi are making waves in China. But Firefly shows that NIO understands the need to diversify and broaden its base. It's a forward-looking move that could give it exposure in key global markets where EV adoption is accelerating. For investors, Firefly is a reminder that NIO is building a long-term strategy, not just fighting quarter to quarter for survival. One of the most overlooked parts of NIO's story is how it's building a community around its brand. In China, factory tours and brand experiences are becoming a powerful marketing tool, and NIO has embraced that. Opening its battery swap facilities and production sites to the public isn't just transparency, it's engagement. It's about creating loyal customers who feel connected to the company. This echoes what Tesla achieved in its early years. Tesla wasn't just selling cars, it was selling a vision, a movement. NIO is trying to capture some of that same loyalty, particularly in China where word of mouth and community play a powerful role in consumer behavior. Add to that the lifestyle branding and the unique battery-as-a-service offering, and NIO is positioning itself not just as another car maker, but as an EV experience company. That differentiation matters in a crowded market. Of course, NIO still faces massive competition. BYD continues to dominate in China with unmatched scale and cost efficiency. Tesla remains the global benchmark, cutting prices and pushing production. XPeng and Li Auto are innovating aggressively. And Xiaomi, the tech giant, just entered the EV market with strong delivery numbers right out of the gate. Against that backdrop, NIO's volumes have dipped compared to some peers. That's a reminder that execution risk is real. But it's also why investors are so focused on the Onvo L90. If NIO can deliver on the 10,000 units per month projection, It could dramatically close the gap with rivals and change the competitive narrative. No discussion of NIO is complete without the macro lens. This month, Bridgewater Associates, the world's largest hedge fund, disclosed that it had cut its holdings in NIO and other Chinese stocks. That rattled sentiment, even though it was more about concerns over China's economy than NIO specifically. On the flip side, Jerome Powell's remarks at Jackson Hole signaled a potential September interest rate cut in the US. That's supportive for growth stocks broadly, because lower rates reduce financing costs and make future earnings more valuable. For a company like NIO that is still unprofitable, a friendlier macro environment can make a big difference. So while macro risks remain, particularly in China, the Fed's dovish tilt provides a cushion. And NIO's ability to hold above 6 suggests investors are willing to look past some of the uncertainty, at least for now. Heading into the coming weeks, the key technical levels are clear. $6 is support. $7 is resistance. As long as NIO defends 6, the breakout structure remains intact. If it can push through 7 with conviction, the next target becomes 750 or even 8. On the fundamental side, investors will be watching for September delivery numbers, early signs of ES8 order traction, and progress with the Onvo production ramp. Updates on Firefly will also be important, as they reinforce the global narrative. And of course, macro data, everything from inflation prints to Fed commentary, will continue to shape risk appetite. So, what's the story this weekend? It's not about a 2% dip on Friday or a 2-cent move in the aftermarket. The story is that NIO has now held above $6 for more than a week. That's quiet strength. That's resilience. And it's laying the foundation for the next chapter. That next chapter isn't just about trading between 6 and 7. It's about whether NIO can translate this stability into growth. Whether it can deliver on the promise of the Onvo L90. Whether Firefly can expand its footprint globally. Whether its battery swap network can become a profitable differentiator. And whether its brand-building efforts can create loyalty in the way Tesla did a decade ago. The stock has proven that 5 is no longer the ceiling. 6 is now the floor. The question for investors is whether NIO can build on that base, push through 7, and position itself as more than just another EV player. This weekend, the focus isn't on headlines, it's on perspective. NIO is holding the line, innovating behind the scenes, and quietly building for the future. The resilience above 6 tells us the market sees it too.